You're watching today's video technical update presented by FX Times. It is Tuesday, June 29th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The fear of a double dip scenario resurfaced again after about a month of relative risk appetite. The risk-adverse moves today started in the Asian session and finally stalled in the US session. We can see many breakouts in volatility and price range, and I'll take a look at the pound dollar, euro yen, Aussie dollar, and the dollar Canadian dollar pairs. This video is being produced at about 3 p.m. Eastern Time during the US session. Here's a look at the euro dollar in the daily time frame, and you've seen this already, the projection to 117. So we saw that the market came back up here in June and basically 61.8 and 78.6% retracement of this decline here. So and now the market is showing some further bearish momentum. Now that's the daily time frame. Looking at the 4-hour time frame, we see this is the climb in June. The correction in euro dollar came up here to almost 1.25, but missed it here, 1.24. So now we are at this basically at the swing projection, and there's some support at the moment at 121.50. So the market is supported there as anticipated. So if the market can break below 121.50, it is likely to continue heading towards 118.80 area, and then possibly the 117 area. So for now, this support is still holding. See if there's a pullback, see if another attempt can break below this. Now if the current rally, see that this is a sign of that there is support and there's a rally attempt at the moment. So if that rally attempt breaks above the 61.8%, then we may continue. We're not done with our consolidation, but if it comes up to, for example, 38.2% and continues lower, that's a good sign for the bearish outlook. The momentum already broke below 40, but wasn't able to break below 30, so that it's not a very strong bearish signal yet, but we are getting some early signs that this consolidation may be over, but we still have some more tests of this this current decline. See, this Gartley means that at the end of this there's going to be some support, and that's what we're witnessing, and that's what we're going to assess. If this rally is a strong one, then we're not done with consolidation. But if this rally tops off early and comes back down, then we have our bearish outlook, our trending bearish outlook becomes more likely. Here's a look at the pound dollar, and you see the difference here with the pound dollar daily and the euro daily. So the euro dollar daily has been bearish. At best, it has been consolidating. The pound dollar pair has had a stronger rally, and this correction has been stronger, especially the second leg, and we see the market extending this correction. If this wave is to be 61.8% of this wave, then it would come up to 151.90 area, which is close. So the market looks like it is approaching an area where we should see some resistance. So that's the expansion using the Fibonacci. Now let's see the retracement using the Fibonacci. This would be around the 78.6% retracement, confluent to this declining trend line, the channel resistance line. So pound dollar still strong, but approaching a important resistance area. 4-hour time frame shows that this rally is intact. While many like euro dollar, for example, started to decline here in mid-June. Here, going back to 4-hour time frame, you see here in mid-June the market kind of topped off and started to slide, but the pound dollar, it topped off but continued to head up. So that's the difference here. The pound is strong, but again approaching important resistance at about the 1.52 level. Euro weakness and Japanese yen strength is apparent in the euro yen pair, as we saw a strong bearish candle today coming after a couple of doji candles and then this bearish candle. So now we broke below this previous low here. Actually, even the lower bound of the support area is broken, but the market hasn't closed below it yet. So the 108 area right now is providing support. Looking at the 4-hour time frame, we saw here this basically we had this pattern broken, came down, and here we had a similar wedge type pattern. So that was broken as well, and that's when this decline came down to break this previous low. So looking at the daily, we see that, let's zoom in a little, we are way below our lows here from 2009. So the market is likely to continue lower, and with this negative reversal projection, the market is targeting 101.50 area. Okay, so it's at 108. There's some support. If that breaks, we may see a slide further to 101.50. Before moving to the Aussie dollar and the US dollar Canadian dollar pair, just wanted to take a look at the Canadian dollar Japanese yen pair. The Japanese yen has been strong and the Canadian dollar has been weak. So there was sort of a double whammy for the Canadian dollar Japanese yen pair, and we saw a strong move today in the daily. 4-hour time frame, we saw some very clear breaks. We had this trend line. After that market broke, the market started to reverse, came down here. We had very narrow volatility, and this is what I mean when we had a breakout yesterday in volatility and price range. So we broke below this previous low here, and in the 1-hour time frame you saw a beautiful wedge pattern broken as well. So this also signaled further decline. Back in the 4-hour time frame, we can project this all the way down to the 82 area, basically 81.75. So the current swing may not be over with a swing projection as such. So 82, 81.75 is the target for the current swing. Here's a look at the Aussie US dollar pair, and you may be already familiar with this chart if you've been following the daily videos. We had basically anticipated this ABC kind of pattern. Some spotted this as a double bottom. It basically was a double bottom. In Elliott wave labeling, it could be a ABC, and that's pretty much what this pattern turned out to be. And you see that. Let me go to the 4-hour time frame actually, because you had here's your wave A, and here's your wave B back down here, and your wave C came up to exactly 161.8% retrace expansion of A. So that's a common ratio of your C and A wave. And now the market is showing that this has completed. This wave has completed, ready to decline. Right now it's testing this the resistance of the A wave as support, as well as the 200 moving average in this 4-hour time frame. Okay, and let's take a look a little closer. We see this 1, 2, 3, 4, 5, and the market broke this channel down a little bit, and then broke up. But then here was basically a pullback, and this pullback failed to reach this previous high and came back down. So that's a very classic move, topping move. Now the market is testing this area, so there might be some support temporarily, and we'll see tomorrow if the market breaks below. If it does break below, look for it to head towards this previous low here, just at about the 0.81 area. Okay, let's see, 0.81 area. Okay, so that's the Aussie dollar. Here's a quick look at the dollar Canadian dollar pair, and as you have seen, commodity currencies such as Canadian dollar and Australian dollar has been sliding, mostly against the yen. The yen has been gaining across the board, even against the pound today. So here's the dollar Canadian dollar. We may have a Gartley completion at this 1.0650 area, so there might be some resistance here, but ultimately our target for this rally is, as you can see here in the daily, we have a negative reversal, which means the RSI low here is lower, but the price low is pretty much the same here. So our projection is to the previous top, and that previous top is probably around 1.0750, just below 1.08. That wraps it up for today. Check out fxtimes.com for more analysis updates and educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.